Yet warning, your business bank is quietly stealing $2,400 year from your investments. I pulled my business banking statement from 2024 and found 14 hidden fees I never authorized. That's 2,400 gone. Money that should have been compounding in my portfolio. But here's what made me physically sick. When I ran the math on what that 2,400 would have become over the next 20 years if I'd invested it instead. $18,700. Gone. Every single year, they do this. And your bank is doing the exact same thing to you right now. They're counting on you never checking. I spent 47 hours last month reverse engineering exactly how banks extract money from small business owners without ever sending a notification. And I found something that genuinely shocked me. There's a fee category that 94% of business owners don't even know exists. I'm going to show you exactly where to find it in your account in about 6 minutes. But first, you need to understand the 3-layer system banks use to hide these charges, because once you see it, you cannot unsee it. You'll look at your bank completely differently. I'm also going to show you the AI tools that caught fees my accountant missed for 3 years straight. We're talking software that scans your statements and flags charges that don't match your account agreement. One of these tools paid for itself in the first 11 minutes I used it. And by the end of this video, you'll have a complete playbook to recover money your bank has already taken from you. Yes, you can get it back. Most people never ask. Let me tell you about Marcus. He runs a landscaping company in Phoenix, does about $340,000 a year in revenue. Solid business. He came to me because his margins kept shrinking even though he was raising prices. His accountant said it was probably fuel costs. His bookkeeper said it was probably labor. Neither of them thought to look at his bank statements. I pulled 18 months of statements and found something wild. His bank was charging him a commercial analysis fee of $47 every single month. That's $564 a year. When I asked Marcus what that fee was for, he had no idea. So we called the bank together. The representative told us it was for account maintenance and transaction processing. Marcus asked what specific service that covered. The rep couldn't answer. She literally could not explain what he was paying for. Here's what's actually happening. Banks create these vague fee categories specifically because they're indefensible. If they called it what it really is, we're taking your money because we can, you'd close your account immediately. So they bury it under technical-sounding language and hope you never question it. Marcus asked for a refund. The bank said no. He asked to speak to a supervisor. The supervisor said they'd review it. 2 weeks later, he got $1,028 credited back to his account. 2 years of that fee refunded because he asked twice. But here's what I haven't told you yet. That $47 fee, it was the smallest one we found. The big one was hiding in a category I'd never even heard of before. I'll show you exactly where to look for it in a few minutes. The second layer of this system is what I call threshold triggers. And this is where it gets genuinely predatory. Your bank has rules buried in the fine print about what happens when your balance drops below certain amounts, when you make more than a certain number of transactions, or when you receive deposits over a specific size. Every time you cross one of these invisible lines, fees activate. I worked with a freelance web developer named Sarah, who runs everything through her business checking account. She was getting charged $35 every single month for excess transaction fees. She made more than 150 transactions per month, and her account agreement, which she never read because nobody reads those, limited her to 125. That's $420 a year for making 25 extra transactions. Her bank never told her she was approaching the limit. They never sent a warning. They just charged her. When I helped her audit her account, we discovered something even worse. Some of her transactions were actually internal transfers between her checking and savings accounts at the same bank. The bank was counting those as transactions, even though the money never left their system. This is where AI tools become essential. I had Sarah run her statements through an expense analysis tool that categorizes every single charge and flags anything that doesn't match standard banking fees. In 14 minutes, it identified $847 in charges over the previous year that fell into what it called questionable fee categories. The tool didn't just find the fees. It generated a dispute letter with specific account agreement references. Sarah sent that letter to her bank. They refunded $600 within 3 weeks. Now, you might be thinking your bank is different. Maybe you're with a credit union or a smaller regional bank. I thought the same thing. Then I ran my own credit union statements through the same analysis and found $234 in fees I'd missed. Credit unions aren't exempt. They just hide it better. This is the part that nobody talks about, and it's the reason I made this video. There's a fee category called earnings credit rate adjustments. I had never heard of it until 6 months ago, and when I learned what it actually does, I genuinely lost sleep over it. Here's how it works. Business checking accounts sometimes earn a small amount of interest or credit that offsets your monthly fees. Banks call this your earnings credit. Sounds good, right? Free money that reduces what you owe. Except banks control the rate at which you earn that credit, and they can change it whenever they want, without telling you. In 2023, when interest rates spiked to 5%, many banks kept their earnings credit rates near zero. They were earning 5% on your deposited money while crediting you 0.15%. That difference? That's the fee you never see. It's not listed on your statement. There's no line item. It's invisible theft. Let me give you real numbers. If you keep an average of $50,000 in your business account, and your bank is earning 5% while crediting you 0.15%, they're making $2,125 per year on your money. You're getting $75. The $2,350 difference is a fee that never appears anywhere. This is the fee category that 94% of business owners don't know exists. And it's the biggest one. The only way to find it is to manually calculate what your earnings credit should be based on current federal interest rates and compare it to what your bank actually credits you. Or you can use AI tools that do this automatically. I use software now that connects to my banking data, tracks federal rate changes, and alerts me when my bank's earnings credit rate falls more than half a point below market rates. It's caught 2 rate reductions this year that I would have completely missed. If you want more strategies like this, hit subscribe. I drop one of these every single day, and I'm building an entire library of content specifically about protecting your business from financial leakage. Quick mention here. If you're creating content for your own business and you need professional voiceovers for videos, courses, or marketing materials, I've been using 11 Labs for AI voice generation. The link is in the description. It's genuinely changed how fast I can produce content without hiring voice talent for every single project. Here's what I want you to do today, not tomorrow. Today. First, download your last 12 months of business bank statements. Every account. Checking, savings, money market, all of it. Export them as PDFs. Second, upload those statements to an AI expense analysis tool. There are several good ones. Ramp has one built into their platform. Mercury does automatic fee analysis. And there are standalone tools like Doceit that specialize in this. Pick one. Third, generate a dispute list. These tools will flag every fee that's questionable, vague, or above market rate. They'll usually give you template language for requesting refunds. Fourth, call your bank and ask for a fee review. Use these exact words. I'm conducting an annual account review, and I'd like to understand the specific services that justify each fee on my account. Banks have to explain their fees if you ask directly. If they can't explain it, ask for a refund. Fifth, and this is crucial, get everything in writing. If they agree to refund fees or change your account structure, get that confirmation in email before you hang up. This entire process takes about 2 hours. Average recovery for business owners who actually do this? 1,247 in the first year. Here's the mistake almost everyone makes, and I made it for years. They find a fee, they get it refunded, and they think they're done. They go back to ignoring their statements. But banks adjust. When they see you disputed one fee successfully, they often quietly add another fee or increase an existing 1, 3, or 4 months later. They're counting on your vigilance fading. The counterintuitive truth is that you have to treat your bank like a vendor you don't trust. Because that's what they are. They're selling you a service, and they're constantly testing how much they can charge before you leave. I know a business owner who set up a monthly reminder, first Tuesday of every month, to spend 15 minutes reviewing his bank statement with an AI analysis tool. In 18 months, he's caught 11 fee increases that weren't disclosed. He's recovered or prevented over $3,200 in charges. 15 minutes a month. That's what it costs to stop the bleeding. And here's the part most financial content creators won't tell you. Sometimes the right move is to leave your bank entirely. If your bank has more than 3 fee categories you don't understand, if they've raised fees twice in the last year without notifying you, or if their earnings credit rate is more than 1 point below federal rates, you should be shopping for a new bank. The switching cost feels high. It's not. Most business banks now offer assisted switching where they'll help you migrate automatic payments, redirect deposits, and close your old account. The entire process takes about 10 days. Remember that invisible fee I mentioned earlier? The earnings credit rate adjustment that steals $2,350 a year from a $50,000 balance? Let me tell you how to fix it in 90 seconds. Call your bank. Ask them what your current earnings credit rate is. Write it down. Then ask them what their highest available earnings credit rate is for business accounts at your balance level. These are usually different numbers. If there's a gap,